Based on the book, Bharat, The Development Dilemma, author C.A. Anil K. Jain, India, is on its way to becoming a global economic powerhouse. Yet, one major challenge continues to slow down its journey: the persistent problem of a high budget deficit. A budget deficit happens when government expenditure exceeds revenue. In India, this gap has often been filled through heavy borrowing, a practice that has both supported development and created long-term risks. Since independence, deficit financing has been used to build infrastructure, expand welfare schemes, and revive growth during crises. During the pandemic year 2020-21, India's fiscal deficit peaked at 9.5% of GDP. Today, the government aims to bring it down to around 5.1% in 2024-25. But persistent high deficits come at a cost. Inflationary pressures, rising public debt, crowding out private investment, weakening of the rupee, and even widening of the trade deficit. While countries like the US and Japan manage large deficits due to stable economies and cheap borrowing, India faces higher interest rates and inflation risks, making deficit financing much harder to sustain. On the positive side, deficit spending has helped finance welfare schemes, infrastructure, and employment programs, creating social and economic benefits. To manage the challenge, India has taken steps such as GST implementation, subsidy rationalization, disinvestment, asset monetization, and tax reforms. The government also aims to increase the tax-to-GDP ratio from 11–12% to around 15% in the coming years. Looking ahead, stronger fiscal discipline, structural reforms, targeted subsidies, and efficient public spending are the keys to balancing growth with sustainability. India's budget deficit has been both a driver of progress and a source of concern. Managing it wisely, with courage and accountability, will unlock the nation's full economic potential. Inspired by the book, Bharat, The Development Dilemma, author C.A. Anil K. Jain.